The views expressed on the following program do not necessarily reflect the views of Money Radio staff, management, or advertisers and do not represent an offer to buy or sell any securities.
Mastering Money is presented for the general information and entertainment of a broad audience. No specific tax, legal, or investment recommendations are being made. Some guests may pay for airtime on Mastering Money. Past performance of all indices and assets should never be relied upon to predict future results. Thank you.
In investing, knowledge is power. To paraphrase Benjamin Graham's investment advice, Warren Buffett's mentor, you should strive to know what you're doing and why. If you don't understand the game, he said, don't play it. Stay away until you do. Being honest, most of us would say we don't actually understand the market. It has gotten so massive and unpredictable, pretending to know every aspect of it is foolhardy. Even Warren Buffett, during his brilliant career, only worked within a slice of the market. Companies that he grew to understand very well and companies that made real money in the real economy. Buffett took a mathematical and systematic approach to investing. Today, we'll review exactly how to do that. Then health insurance and Medicare expert Shelley Grandich joins us. A great show for you today. Mastering Money is on the air.
Can we get a to-go box?
It's time for Mastering Money, the home of high IQ retirement planning and the Black Diamond Dividend Strategy, with your host, best-selling author, and leading financial advisor, Steve Jurich. Steve heads IQ Wealth Management in Scottsdale, a registered investment advisor and fiduciary with asset custodian Fidelity Institutional, member FINRA SIPC. But enough about those guys. Let's talk about you and your money and get this show on the road.
Hey, roger that. Let's get this show on the road, and let's definitely talk about you and your money. Welcome to the Common Sense Financial Hour. You'll find us right here Monday through Friday at 8 a.m. and 11 a.m. That is on Money Radio, AM 1510, 105.3 FM. On your computer, you can find us at masteringmoneylive.com, masteringmoneylive.com. And catch our 4:30 p.m. daily update during Gary Kultbaum's show. And if you'd like, you can access all of our podcasts on iTunes, the free Mastering Money app on Android or anywhere, or online at retirementradiousa.com. Hey, thanks so much for joining us. I'm Steve Jurich. We're always aiming to help you make more money with your money. So let's get on with it. Well, it sounds like it's time for the bond report. U.S. 10-year Treasury really behaving itself. Yield now at 1.436. You don't own any bonds if you listen to us, and if you're one of my clients, there's no need to own any bonds right now in this world. A 10-year Treasury, give me a break. 1.4 yield for 10 years. Over in Germany, they won't even pay you to own them. You have to pay them. It's still a minus 0.2 for 10 years over there. And that's just kind of the way it is. Over in the UK, you won't even get 1%, 0.7% yield for 10 years. And that's not going to feed the bulldog, as they say. United Airlines Holdings, ticker symbol UAL, is making its largest ever plane order, adding some 270 Boeing and Airbus jets to fuel its post-pandemic growth plans. The Chicago-based airline said Tuesday it will purchase 200 of Boeing's 737 MAX jets and 70 larger Airbus 321 Neos, a deal valued at more than $30 billion at list prices before customary discounts. United is looking to replace most of its 50-seat jets and other smaller, older aircraft with those larger planes that can carry more passengers and allow it to sell more premium seats as part of a strategy to expand flying out of its main hubs and to lure more high-paying travelers. I flew United recently. It's not too bad. The order, the largest by the U.S. airlines since American Airlines ordered 460 new aircraft from Boeing and Airbus in 2011, is the latest sign of U.S. Airlines' growing confidence that travel is on course to snap back after being decimated by the coronavirus pandemic. United Airlines lost more than $7 billion last year and accepted billions of dollars in government aid to continue paying workers. Now, the airline expects to make money in July on adjusted pre-tax basis. That's amazing, which would be its first profitable month since January of 2020. According to the airline. The airline is also preparing to go on a hiring spree to support the new planes. United said it expected to hire 25,000 workers by 2026. See, this is part of why the market can always make some form of recovery. It's never going to go to zero. You have people who are working who contribute to 401ks. A year ago, airlines were parking planes in deserts and hunkering down for protracted pullback in travel. While many business travelers have yet to return and many lucrative international routes have yet to reopen, airline executives have said in recent months that the fast rebound in domestic leisure travel has given them confidence to start rehiring plans and start adding to their fleets. United has operated fewer flights than other major airlines throughout the pandemic, charting a more conservative course, but its order is the airline's latest wager on a strong rebound. United began laying the groundwork for its order last summer, says the Journal, when executives met in a United club at Chicago's O'Hare International Airport, according to United Chief Executive Scott Kirby. Though the airport was still largely empty at the time, except for janitorial, the executives began discussing how to position United to emerge from the pandemic. They decided, for example, not to permanently retire any aircraft types as some rivals had done. Combined with orders already on its books, United now has 500 new narrow-body planes set to arrive in the coming years, a rapid influx of jets that will help it increase flying by 4% to 6% annually. That's a lot of money in the airline business. Chief Commercial Officer Andrew Nocella told the Wall Street Journal. United Airlines is making that huge order for hundreds of new jets from Boeing and Airbus. It's by far the largest order by an airline in the past decade. The order is good news for companies ranging from other companies too, aerospace suppliers, to aircraft makers, to airlines. Stock in General Electric, they might finally be coming out of the crypt at GE. Getting the biggest bounce. GE might not have been mentioned in the United's announcement, but it will undoubtedly benefit from the order, says the Wall Street Journal. Why? Well, it makes the engines for both jets. In fact, GE's commercial aerospace operations are the company's largest and most profitable business. GE and Safran make all that's SAF.France symbol on that, make all of the engines for the MAX in their 50-50 joint venture called CFM. Airlines can order A320 Neo jets with engines from that joint venture or from Raytheon Technologies, a member of the Black Diamond Dividend portfolio. Stock in the Chinese electric vehicle maker NIO, N-I-O, is continuing its remarkable comeback, cracking $50 for the first time since March. Expectations that delivery numbers for the second quarter will show things in China are getting better faster than expected. Among others, appear to be giving the stock a lift. NIO's ticker NIO, stock traded as high as $50.61 yesterday. The stock is up about 29% over the past month. Not so bad. Crushing comparable returns of the S&P 500 and Dow Jones Industrial Average. Yeah, by a lot. It's been a bouncy ride, though. Coming into Tuesday, shares have dropped 10 times in June and risen 10 times with an average daily gain of 4.3%. There we go. The average drop is about 1.7% in a market that's up a tenth here and down a tenth there. Other Chinese EV stocks are ripping too. XPeng, that's symbol XPEV, shares are up about 39% over the past month, while Li Auto, LI, shares have gained about 45%. Those data points show what has happened, but they don't help investors know why NIO is rallying. A combination of hope regarding deliveries, broader moves in the stock market, and optimism over NIO's competitive position could be behind the move. One key fact is that April and May electric vehicle sales in China rose a mere 200% and 170% year over year. Not so bad. Expects to deliver 21,000 to 22,000 vehicles. We'll see how that goes. That's the way, let's look at the way it was. 1859, Charles Blondin became the first person to cross Niagara Falls on a tightrope. Yikes. And 1908, a meteor explosion in Siberia knocked down trees in a 40-mile radius and struck people unconscious some 40 miles away. 1921, U.S. President Warren G. Harding appointed former President William Howard Taft Chief Justice of the United States. Imagine that, after President, now you're Chief Justice. 1936, Margaret Mitchell's book Gone with the Wind published. 1953, the first Corvette rolled off the Chevrolet assembly line in Flint, Michigan, sold for $3,250. 1974, the July 4th scene from the Steven Spielberg movie Jaws was filmed. 1985, Yul Brynner left his role as the King of Siam after, get this, 4,600 performances on stage in The King and I. Whew. That's the way it was, the way it is. The market has gotten so massive and unpredictable, pretending to know every aspect of it is foolhardy. Even Warren Buffett focused on just a concentrated slice of the market and became an expert. That's how you win. We'll help you zero in on your optimal strategy next. Then Medicare expert Shelley Grandage joins us. It's a big show for you today, so don't go away. You are listening to Mastering Money on Money Radio, and we definitely thank you for that.
The best things in life are free, but you can give them to the birds and bees. I need fun. That's what I want. That's what I want. That's what I
Expert advice, honest answers. Steve Jurich, right here on Money Radio. We're talking about you and your retirement, financial planning, 401k and IRA rollovers, pension planning, Social Security, taxes, life insurance, and estate planning. Life is a journey, but it takes money to get there. To get in touch with Steve, call 888-310-1776. 888-310-1776.
Today, with bonds paying so little, the stock market uncertain, and pensions getting rare, more retiring professionals are rolling over their 401ks into special forms of cash-building, income-paying annuities to stay in control of their money and to put a firewall between them and the next bear market. The annuities of old are a thing of the past. They've been revamped, made more safe, the income is higher, and many annuities have no caps. You can avoid all market losses while building pension-like income that you can never outlive. And the income can be double or triple that of quality bonds. Why risk your retirement nest egg when you don't have to? Now is the time to protect your principal, secure your income, and protect your heirs with a carefully selected next-generation annuity for your rollover IRA. Call Steve at IQ Wealth today, 480-902-3333. Guarantees rely on the financial strength of the insurer, so compare with Steve. Call 480-902-3333 or visit IQannuity.com.
If you're rolling over your 401k to an IRA soon, but not sure if you want to go all in on this crazy market, here's what many retiring professionals are doing. How about a safe and secure IRA offering a contractually guaranteed 10% income bonus that grows 7% annually guaranteed? Your income can double in 10 years. Meanwhile, neither your principal nor your retirement income is ever subjected to a market downturn. Even if the market crashes by 50%, you get the 10% bonus. Your income keeps growing at 7%, and your principal may grow without losses uncapped. You go up with the index, never down, forward, never back. Get a 10% income bonus with a 7% contractually guaranteed growth rate. I compare over 1,200 annuities with a fiduciary duty and can help you retire and stay retired.
Guarantees rely on the financial strength of the insurer, so compare with leading annuity authority Steve Jurich now. Visit IQannuity.com, IQannuity.com, IQannuity.com.
Listen to The Ben Shapiro Show every Monday through Friday, right here on Money Radio, 1510 AM and 105.3 FM. Now, back to Mastering Money with Steve Jurich.
Welcome back to Mastering Money, brought to you by IQ Wealth, where financial success is not only possible, but highly attainable. I'm Ken Morgan with retirement strategist and best-selling author Steve Jurich.
Hey, how you doing, everybody?
It's time now for the IQ Wealth Market Intel segment.
It sure is. Time to get to work.
In investing, knowledge is power. To paraphrase Ben Graham's investment advice, Warren Buffett's mentor, you should strive to know what you're doing and why. If you don't understand the game, he said, don't play it. Stay away until you do. Being honest, most of us would say we don't actually understand the market. It's gotten so massive and unpredictable, pretending to know every aspect of it is foolhardy.
Yeah.
Even Warren Buffett, during his brilliant career, only worked within a slice of the market, companies that he grew to understand very well, and companies that made real money in the real economy.
So true.
When you get away from investing in companies and instead start investing in stocks, you become a commodity trader.
Right.
Every mathematical equation has variables and constants. Buffett worked at finding constants and reducing variables. He worked at controlling his controllables. He knows that you can't fake things like company profits and paid dividends.
Right.
Companies can make their balance sheets look better for a while with fancy accounting, but increases in sales, profit margins, and dividends cannot be made up for long. They're real. Buffett made his fortune staying consistent and focusing on real profits, real sales, and real dividends. Dividends don't lie.
That's right, Ken. If you're building a portfolio for retirement, it may be wise for you to turn away from treating stocks like commodities, supply and demand only. Why have only one way for your money to grow? Price appreciation is nice, but it can be temporary. If you don't sell at exactly the right time, typically when you're feeling best about your investments, you can lose 10 years of stock market gains in just 10 weeks of stock market losses. That happened in 2008. And in an era of robotic algorithmic trading, when all the robots could decide to sell at the same time, the risk may now be higher than ever.
Which is why investing for dividends makes so much sense, Steve. Inflation and market risk are two of the main risks that must be weighed against each other when investing. Investors are always subjecting themselves to both in varying amounts depending on their portfolio's asset mix. And, of course, one of the key challenges during low interest rate times like these is how to invest for income, not just now, but for the rest of your life and your spouse's life.
Right.
Bonds no longer pay 5 to 7% like decades past. If bonds were still available at 5% interest, a $1 million bond portfolio will provide an investor with a $50,000 annual income stream and will protect the investor from market risk.
That's right.
In 12 years, however, the investor will only have about $35,000 of buying power in today's dollars, assuming a 3% inflation rate. Add in a 30% tax rate, and that $50,000 of pre-tax and pre-inflation adjusted income morphs into less than $25,000 in actual spending power. Those will be poverty wages down the road.
Yeah, and that's tying up $1 million. That's right, Ken. The future is getting more expensive all the time. Prices are getting higher and interest rates getting lower. A 10-year Treasury bond today will only pay you $22,000 annually on $1 million or less. I mean, a little under $22,000 pre-tax. It's ludicrous. Imagine tying up $1 million for 10 years when after taxes, your buying power will be less than $12,000 due to inflation by the time the bond matures.
All right, Steve, which is why more retired investors are making the move to dividend investing.
Right. Mm-hmm.
You get money in your mailbox every quarter from companies that sell necessary goods and services to repeat customers.
Mm-hmm.
They make real sales and real profits, and they share those profits with you, the investor.
Exactly, Ken. And with a strategy like the Black Diamond Dividend Growth Portfolio, your dividends rise every single year at a rate of usually 4% to 8% per year, helping you to fight inflation. An equity portfolio has its own set of risks, of course, including recession risk, central bank risk, event risk, and political risk. No aspect of a stock market investment is guaranteed. If you want guarantees, hey, buy annuities.
Good point, Steve. In fact, the combination of annuities and dividend growth stocks in a retirement portfolio may provide the optimal combination of guarantees and income plus compounding growth that you can't find anywhere else in the investment world. Try it. You won't come up with much, if anything.
That's true. There's enough to worry about in retirement, Ken. Getting paid steady dividends and high-quality guaranteed annuity income for the rest of your days is one way to stop worrying about markets and robots and start living your life. When the money is there and the money is safe, you breathe easier.
Which is why dividends make so much sense. When you invest in growth and momentum stocks only, you limit yourself. You have less control and are not making an actual financial return until the day you sell the stock.
Right.
Your timing had better be good because you're merely speculating about the future, and the future may not cooperate.
True.
When you're getting paid in cash from your investments each quarter with dividend growth stocks, you are always getting a return. After all, 3% to 5% is a lot better than zero.
So true.
And when you own the right stocks that grow their dividends every year and you keep reinvesting to acquire even more shares of those stocks, your dividend return may double one day.
Right, and likely will. Suppose that instead of investing in a portfolio of bonds, as in the previous examples, you invested in healthy dividend-paying equities with a 4% yield. These equities typically grow their dividend payout on the low end at 3% annually, which would cover the inflation rate, but more likely would grow at 5% to 8% annually. Now, let's say you've got a 5% growth rate on a 4% dividend yield, initial dividend yield. That would be a $40,000 income stream on $1 million, which by simple math you can do at home, would grow to almost $80,000 annually in under 10 years. In today's dollars, that same $80,000 would be worth about $52,000 at the same 3% inflation rate. Your inflation-adjusted income in 10 years would be higher than a bond paying 5% today. It's not uncommon to see well-managed 10-year-old dividend portfolios with a 9 to 11% yield and a 20-year-old portfolio with a 20% yield on the original cost. That'll help you with inflation down the road. A retirement portfolio that combines compounding dividend growth stocks along high-quality next-generation principal-protected annuities paying from 5 to 9% income for life, depending on age and deferral period, has both the ability to withstand inflation and the ability to withstand market fluctuations while helping to set aside the fear of running out of money. It's a double dose of common sense in what we call the IQ Wealth Smarter Bucketing System.
Invest smarter. Make the smart call to IQ Wealth Management and Scottsdale financial planner Steve Jurich, one of Arizona's leading 401k rollover advisors and the originator of the Black Diamond and Blue Diamond dividend growth strategies. Steve can help turn your risky pile of mutual funds with unreliable low dividends into a quality diversified portfolio with built-in security and consistently growing dividends. Steve works with a team of independent tax, accounting, and health insurance professionals to help you build a financial plan second to none. Get a free second opinion of your current plan for rolling over your 401k, long-term care, and Medicare planning, or your current annuity. Find out why more listeners are turning to Steve for financial guidance and making the move to IQ Wealth. The meeting is free, but appointment times are limited. So call right now, 480-902-3333, and please visit IQWealth.com and BlackDiamondDividend.com.
It's not what you make, it's what you keep that counts. And what keeps coming your way. Cut your fees, lower your taxes, increase your income. More for you and more for the people you care about most. That's the IQ Wealth Strategy. To schedule a complimentary review with Steve, call 888-310-1776 from anywhere. Stay with Money Radio. The journey continues.
Steve Jurich here. Many people today are looking for liquid alternatives to leaving money sitting in the bank or in money markets paying zero. I can relate. That's why many of my clients are moving to what are known as liquid buffered index accounts issued by major banks and insurance companies. These are contractually assured structured banknotes with a strong upside into the double-digit range, but also with protection to the downside known as a buffer, fully liquid on any day the market's open. So you never have to worry about getting stuck. And if you see the market going the wrong way, you can simply cash out. Very rarely can you find a financial opportunity with a level of safety, yield, and liquidity all in one asset with no surrender charges. But now you can with a liquid buffered index account through IQ Wealth. Let's get your money working today.
Invest smarter. Advisory services by IQ Wealth Management, a registered investment advisor. Meet with Steve free. To request an appointment online, visit IQWealth.com. That's IQWealth.com, IQWealth.com.
Hey, Steve Jurich here, inviting you to listen to our show Mastering Money Monday through Friday at 8 a.m. and 11 a.m. right here on Money Radio, AM 1510 and 105.3 FM. You can also hear any show, anytime with the free Mastering Money app or by going to retirementradiousa.com. Both are crystal clear and right there on your smartphone, free and easy. Our show is all about you and your retirement. You're personally invited to join us Monday through Friday at 8 and 11. See you there.
1, 2, 1, 2, 3, 4, 1. If you got the money, honey, I've got the time. We'll go honky-tonkin' and we'll have a time. We'll have more fun, baby, all the way down the line. If you've got the money, honey, I've got the time.
He's Arizona's money guy, best-selling author, financial advisor, and Kiplinger contributor, Steve Jurich. Let Steve show you how to plan, invest, insure, retire, and stay retired. Now, here's Steve.
Yeah, welcome back to Mastering Money, the home of high IQ retirement planning. If you can't listen to our entire program live today, we're on at 8 and 11 a.m. Monday through Friday, plus any time of the day or night on your smartphone or computer. Just download the free Mastering Money app or go to retirementradiousa.com. Mastering Money is brought to you daily by IQ Wealth Management in Scottsdale, an independent registered investment advisor with asset custodian Fidelity Institutional. Our firm is part of a world-class financial network partnering with AE Wealth Management and Sterling Capital, both SEC-registered investment advisors with over $60 billion under management combined, providing a solid succession plan for our clients. They are on the job right now watching over our clients' portfolios. They're an awesome team. IQ Wealth is the exclusive home of the Black Diamond Dividend Growth and Blue Diamond Technology Leaders portfolios. It's time now for the Mastering Money Q&A segment. And today, let's move to the topic of health insurance and Medicare, to include both individual and family health insurance, small business health insurance, and Medicare policy selection. Really what you need to know about the differences that occur between the narrower coverage of Medicare Advantage, yes, narrower, and the broader and deeper coverage of original Medicare with a first-class supplement. What about you? How strong is your current health insurance plan? Is it the best you can get for the money? Are you sure? If it isn't the best, how soon would you want to know that? Here's the deal. If you want the type of health insurance that covers you in all 50 states, does not need a referral to see a specialist. Please, Mommy, can I go see the specialist? No, you don't need that. And actually could save you thousands of dollars a year in premiums and deductibles. You came to the right place. We have with us one of the top authorities on Medicare and health insurance programs in the Valley. She is one of Arizona's best experienced independent health insurance agents, Shelley Grandage. Shelley has helped clients with health insurance and Medicare policy selection for more than 20 years. In fact, we refer to Shelley as the Medicare Mythbuster for sure, because she's so good at dispelling the myths and misinformation associated with Medicare and Medicare Advantage plans. Shelley Grandage, welcome back to Mastering Money.
Good morning, Steve.
Good morning, Shelley. You know, Shelley, there are several categories of our listeners with regard to Medicare. Those not of Medicare age, those coming near their 65th birthday or retirement from a group plan, and those who already have either Medicare or Medicare Advantage. But we want to talk a little bit today about those who are not yet of Medicare age or who have a spouse who is not yet of Medicare age. And they are forced into trying to find really good health insurance in today's market. It's not out there, on billboards. It's not always easy to find. I know that there are many people that you work with right now, many of our listeners, many of our clients, who were really pleased to find that there is some really rock-solid insurance that can cover you for specialists, etc. So what do you say today? We maybe compare private health insurance. I mean, when we say private, it's still from a huge multi-billion-dollar company. It just means it's not government-run, to government-run Obamacare, otherwise known as Affordable Care Act policies. Can we take some time to break that down a little bit more today?
We sure can.
Okay, good.
All right. You just want me to hop in, Steve?
Yeah. Oh, you go for it. Yeah, I'm done.
All right. All right. Sounds good. And so, working with a couple of couples, a couple of families that have two homes, for example. Today, I'll be helping one who lives in Illinois half time and in Arizona the other 50% of the time. So we cannot go the Affordable Care Act route. He would be out of network for half of the year. It's just not going to work for him. Okay. If we go an Affordable Care Act route, we have to say we're signing up in Maricopa County, for example, and then that's where our primary coverage would be. We only have coverage if we leave Maricopa County in the event of an emergency. So for these few families that I've been working with this summer, that's just not an option, okay? So the big differences are, for example, I just quoted one of our mutual clients, Steve. She's 58. Her husband's already on Medicare. And, we were coming in on an Affordable Care Act plan with an $8,100 deductible.
Man.
And her husband said, "Can we find something with a lower deductible, please?"
Right.
Private insurance, I can set you up so that you have $1 coverage, and it's a worldwide PPO. So what that means is worldwide, yeah. I'll give you some examples, What that means is you have, again, $1 coverage, no copays when you go to the doctor, nothing down when you go to the doctor, no deductible to meet. I always set the expectation that, your bills will be run through one of the two PPO networks that we contract with, which just means you can go to any doctor you want. You don't need a referral. They'll be repriced. The insurance company pays, and you'll probably get a copay on the back end. But if you're someone like I used to be, who had a $6,000 deductible before my plan paid anything, the fact that you can have no deductible is a big deal.
Yeah, absolutely. Yeah, so you pay a little on the back end, but when you add it up at the end of the year, end of 3 years, after 5 years, you have so much better coverage. You're not worried about going outside of Maricopa County, for gosh sakes. And you end up paying far, far less for better coverage without having to ask someone if you can go see a specialist. You don't need the referral. Hey,
exactly. So I'm going to give you. I'm sorry. Go ahead.
No, I just wondered. You got me going with this worldwide. So somebody, people are going to start traveling again if Europe ever gets the coronavirus thing figured out completely. But so if you travel to Europe as an example, and you're on one of the plans you're talking about, explain how that coverage would work.
Okay, so I'm going to give you a recent example from a Chinese-American family.
Okay.
They went over to Hong Kong. Little 6-year-old, she became ill. She was seen twice by the doctor. You'll have to pay overseas depending on which country you're in.
Yeah.
Some of them won't charge you at all, but they did have to pay in China. However, fortunately, they came home with a statement that was in Chinese and in English. Dad just scanned the statements to me. I submitted them to the health insurance company, and they reimbursed him for her medical charges.
Jeez.
So I thought that was pretty cool.
I think that's fantastic in this day and age. Yeah, that's something that actually works how you think it's going to work.
So I wanted to give you an example, too, just kind of hopping around. But the 63-year-old gentleman that I'll be helping here shortly, so we're going to get him the worldwide PPO plan where he can go anywhere he wants, all-inclusive, no deductible for about $700 a month. Man, he's 63. He does have some health issues, okay?
Okay.
Now, if I'm on the Affordable Care Act plan, I could get him an HMO silver level plan for $539 a month, which, yes, that's less expensive, but the deductible is $6,500.
Yeah.
So if he's going to the doctor, he's okay because he's got some flat copays, but anything else he's doing, imaging, blood work, any kind of testing, is just going to go toward that big fat deductible, and it's going to feel like I used to feel when I had that kind of deductible. you know?
That really is where the shock comes in. People think, well, I'm only paying $539. I got this copay. Okay. Then they do some stuff like you were talking about, some tests, all this other stuff, and you get this bill for $2,400 or $3,800. And you go, well, I thought I had insurance. Well, you do. As soon as you get past the first $6,000, yeah. And that's every year, right?
Every year, resets every January. So if I enroll you for a July 1 start, the $6,500 applies for between now and the end of this year.
Yeah.
And then January, guess what? We start all over again, with the $6,500 deductible. So again, you're okay if all you're doing is going to the doctor. But if he or she orders anything else, or you go to the ER or you're hospitalized, you're going to pay that first $6,500.
Ooh, going to the ER alone. I mean, think
Yikes, I know.
Scary, yeah. I mean, that's a blank check when you go in there. So if people focus only on what's in front of them, and even people with high IQs do this all the time, I see it in the financial planning side, or the investment side, where we have people focused on, say, that monthly premium. Oh, that's lower. And if you only focus on that, and then you want to take a trip to Connecticut or Florida or Europe or someplace, Canada when it opens up, your coverage is what? I mean, when you go outside of Maricopa County with a Affordable Care Act plan, what's it like?
Yeah, only emergency care. So if you go to the ER, you're okay.
Yeah.
If you need to go to maybe urgent care because you don't want to go to the ER, like who does, right?
Yeah.
Or you want to go to the doctor while you're visiting family and friends, which I just had a client do on the private health insurance. She had a problem with her foot. So she texted me and she said, I'm in Illinois and she lives in Arizona. I need to go see a podiatrist. Can I do that? And I said, yes, sure. Just give me your zip code and I'll run a list of podiatrists in network for you and I'll email it over. And the cool thing about the private insurance is it will pay any doctor. But if you're in network, you get the repricing, the massive discount. So, if at all possible, let's do that, right? So we want to make our money go farther.
You mean by repricing, because I know when we bought policy, you just simply mean that your insurance company goes to the provider and says, this is what, you're going to charge, not just trying to beg them. I mean, they actually have quite a systematic approach to making sure what the charges are for a certain, treatment.
Yep. So I'll give you my personal example. I get blood work done every 6 months at LabCorp, okay?
Right.
Nothing special.
Yep.
LabCorp charges $2,500.
Jeez.
The insurance company says, no, we'll allow $250, no joke. And
Wow.
then they pay the bill, and LabCorp cannot charge me more than the insurance company allows.
Yikes. Hey, Shelly, thanks for stopping in. If you want to save hundreds, thousands of dollars, you got to talk to her. Thanks, Shelly. We'll talk to you soon.
Have a great day.
If you have questions on Medicare and Medicare Advantage or alternatives to Obamacare with lower deductibles and lower monthly premiums, make arrangements to speak with independent insurance agent Shelly Grandage with no charge or obligation. Shelly is meeting with clients by telephone, in person, online. She makes it easy to get signed up. You can arrange to meet with Shelly by simply calling Barb at IQ Wealth Management. Barb will connect you with Shelly so you can get all of your questions answered and compare the best plans. Simply call Barb at 480-902-3333 or toll free 888-310-1776, 888-310-1776. Barb is courteous, friendly, and helpful. She'll take good care of you. So will Shelly. 888-310-1776. Now don't go away. We're coming right back with more money making and money saving ideas. Keep it right here. We'll be right back around the corner. Steve Jurich here. Success is never a complete accident, whether we're talking about your working career or the investments you now base your retirement on. Sure, you can get lucky along the way, and all of us can look back on some good luck we've had here and there, but mainly you are where you are financially because you've been intentional about the choices at work you've made and the choices you've made with your investments. But once you hit a certain age and you shift from you and your money working to just your money working, can you afford to rely on luck as your strategy? Or in this crazy economy, Is it time to stay intentional about your fixed income and investment choices to make the next 10 to 30 years of your financial life a continued success? I think you'll find the IQ Wealth Smarter Bucketing System is the answer. Let's meet soon and talk about it.
Invest Smarter Advisory Services by IQ Wealth Management, a registered investment advisor. Meet with Steve free. To request an appointment online, visit IQWealth.com. That's IQWealth.com, IQWealth.com. Today, with bonds paying so little, the stock market uncertain, and pensions getting rare, more retiring professionals are rolling over their 401ks into special forms of cash-building, income-paying annuities to stay in control of their money and to put a firewall between them and the next bear market. The annuities of old are a thing of the past. They've been revamped, made more safe, the income is higher, and many annuities have no caps. You can avoid all market losses while building pension-like income that you can never outlive. And the income can be double or triple that of quality bonds. Why risk your retirement nest egg when you don't have to? Now is the time to protect your principal, secure your income, and protect your heirs with a carefully selected next-generation annuity for your rollover IRA. Call Steve at IQ Wealth today, 480-902-3333. Guarantees rely on the financial strength of the insurer, so compare with Steve. Call 480-902-3333 or visit IQannuity.com.
You've been saving and working so long to grow that 401k, but the market's gotten risky and you're stressed about your IRA. It's causing you to worry and the picture's looking dim. Have you heard about Steve Jurich? You really should talk to him before your plan rolls over to a risky IRA. Do the smart thing, call IQ Wealth Management today.
Listen to The Ben Shapiro Show every Monday through Friday, right here on Money Radio 1510 AM and 105.3 FM. Now, back to Mastering Money with Steve Jurich.
Welcome back to Mastering Money, home of smarter financial planning. We're always looking for ways to help you build, grow, and protect your retirement the smart way. Send me an email if you like, steve@iqwealth.com. I'll get back with you. I am Steve Jurich. Thanks for joining us. If you miss any of our shows, Monday through Friday at 8 a.m. and 11 a.m., or the afternoon update here at 4:30 p.m. during Gary Kultbob's show. Well, we're on 24/7 if you like. Simply download the free Mastering Money app from your app store or go to retirementradiousa.com. Either way, pick any show you want, anytime you want. Financial planning is a process, not a document. At IQ Wealth, we help our clients implement strategies matched to their risk tolerance, income needs, and family priorities. We help our clients focus on where they are now, where they want to be, and what steps must be taken right now to get there. Here's what the IQ Wealth Management team can do for you. Consolidate and take inventory of your liabilities, expenses, and lifestyle needs. Help you to formalize your goals and put them in writing. Simplify and clarify your approach to money. Help you prioritize your financial opportunities. Prepare an asset allocation model for you to achieve the optimal rate of return for a given level of risk. Build you a written income strategy that relies more on math rather than markets and takes you all the way through age 100 with safety. Help you to segregate your money into buckets, each with its own specific task and time deadline. Help you to maintain ample liquidity now and in the future. Help to keep your fees lower, not higher. Help you weigh and analyze pension, lump sum, and rollover decisions. Analyze and help optimize your Social Security decisions, when to take it, maybe when not to take it. Analyze and help optimize long-term care solutions. Monitor your investments, and professional supervision is there at all times. Review your IRAs and all beneficiary designations. Assist with the orderly and tax-free rollover of your 401k, 403b, 457, or TSP. Review your insurance and annuity holdings and help you determine if an annuity is right for you, and if so, exactly which one. Through our comprehensive and proactive approach to your retirement, we work to help you build true financial independence, both now and for the long run. We want to help you look the future right in the eye, maximizing your opportunities, minimizing your risk. We call that doing our job. There's never been a better time than right now to explore The IQ Wealth Smarter Bucketing System, it won't cost you a penny to find out more. Enjoy a solid guaranteed income for life with no market risk at a rate of 5 to 9% depending on age and deferral period, alongside exceptional dividend, tech, and buffered growth investments. It's time to grow your wealth.
You retire only once, but retirement strategist Steve Jurich and his team at IQ Wealth Management help people retire every day. Whether you're retiring early, late, or on time, you want a plan that is clear, easy to understand, and within IRS rules. You want truly effective strategies based on common sense solutions that are proven, designed by an experienced fiduciary with your best interest in mind. When you visit IQ Wealth, you'll notice a real difference. You get treated with respect, and you'll know right off, Steve wants you to succeed. He'll take the time to answer your toughest questions, such as, should you consider an annuity? And is it time to start a well-disciplined, done-for-you dividend reinvestment strategy? For a clear financial plan that can lower your risk and lower your fees while increasing your income and net worth, make the smart call to accredited investment fiduciary Steve Jurich in Scottsdale. 480-902-3333 and visit IQWealth.com.
Hey, thanks for tuning in. Hope you enjoyed sharing some time with us today. Stay out of harm's way, try a little kindness, and keep living the dream. See you next time. Take care now.
You've been listening to another edition of Mastering Money with best-selling author and retirement strategist Steve Jurich. To talk with Steve about mastering your retirement, call IQ Wealth right now at 480-902-3333 and visit IQWealth.com.
Copyright 2015 through 2021 by IQ Wealth Media. All rights reserved. Reproduction or rebroadcast of any kind is a violation of federal law and is strictly prohibited without written consent of IQ Wealth. Investment advisory services by IQ Wealth Management, a registered investment advisor. All information presented is general in nature. No specific tax, investment, or legal advice is being given. Past performance is not a guarantee of future results. Always seek professional, legal, or tax advice. Listening to Mastering Money does not begin a professional relationship. Steve can only make recommendations after a personal review to learn your risk tolerance, goals, and time horizon. Insurance services provided by IQ Retirement Planning, Inc. Guarantees rely on the financial strength of the issuing insurer. Annuities are financial vehicles designed for long-term income preservation and moderate growth. They work best when paired with equity growth investments and cash positions. They are not FDIC insured, and surrender charges may apply for a period of time. Income rider values are not cash values. Ken Morgan is not an employee, advisor, or affiliate of IQ Wealth. He is not compensated for any financial advice or products. Some guests may pay for airtime on Mastering Money, and Steve may hold positions in some assets mentioned. Therefore, he may be biased in his views. I'm producer James Tidwell. Thank you again for listening to Mastering Money. To meet with Steve personally, please call his scheduling team at 480-902-3333 and visit IQWealth.com. See you next time.
Steve Jurich here. You know, success is never a complete accident, whether we're talking about your working career or the investments you now base your retirement on. Sure, you can get lucky along the way, and all of us can look back on some good luck we've had here and there, but mainly you are where you are financially because you've been intentional about the choices at work you've made and the choices you've made with your investments. But once you hit a certain age and you shift from you and your money working to just your money working, can you afford to rely on luck as your strategy? Or in this crazy economy, is it time to stay intentional about your fixed income and investment choices to make the next 10 to 30 years of your financial life a continued success? I think you'll find the IQ Wealth Smarter Bucketing System is the answer. Let's meet soon and talk about it.
Invest Smarter. Advisory services by IQ Wealth Management, a registered investment advisor. Meet with Steve free. To request an appointment online, visit IQWealth.com. That's IQWealth.com, IQWealth.com.